Got no time to always keep an eye on the stock market? You can stop worrying about the stocks that you have and those that you don't after setting up your conditional order. Set, forget, don't fret. Now available on AB Capital Advantage. Here's how. Log in to your AB Capital Advantage account. On the Quick Trade tab, select either buy or sell and choose Stop Limit as typing order. Select a stock and indicate the number of shares. Set the limit price. It's the highest price at which you are willing to buy or the lowest price at which you are willing to sell stocks. Set the trigger price. Once the price of the stock reaches your trigger price, the platform will automatically start buying or selling the stock. Please take note. For buy orders, the trigger price should be greater than the current stock price. For sell orders, the trigger price should be less than the current stock price. Lastly, choose the term of your conditional order. It can be good for a day, a week, or a month. But please keep in mind that triggered conditional orders are only valid on the day they are triggered. That easy! With the AB Capital Advantage conditional order feature, you don't have to miss stock market opportunities and you can manage investment risk even when you are away. Find out how you can have access to our AB Capital Advantage platform by visiting our website.
Good afternoon, everyone. I am Renee Allison Estamata of AB Capital Securities, your host for today's earnings call. Join me as we discuss the first quarter 2023 earnings results of Bloomberry Resorts Corporation, the leading integrated resort developer and operator here in the Philippines. Bloomberry exceeded its pre-pandemic revenues during the first quarter of 2023 as its consolidated net gaming revenues grew 79% year-on-year to 12.9 billion pesos, while its net income surged 338% year-on-year to 3 billion pesos. To learn more about the company's performance, we have with us today Bloomberry's Director of Investor Relations, Jonas Ramos, and Investor Relations Manager, Robin Venturina. Hi, Jonas and Robin. How are you?
Hello, hi Renee. We're good. We're good.
Afternoon.
That's good to hear. Okay, all right. Now, I know you have a lot of things to share with us today, so please take it away.
Yes, thanks, Renee. Good afternoon to everyone on this call. No, so we have a quick presentation to show you before we head on to Q&A. We'll have a few slides as an overview of our company, some industry updates, and our latest financial performance, and also updates on our upcoming projects. So we have a 3 to 4 slide overview of Bloomberry, or BRC for short, for those in the call that we are meeting for the first time. And for those who follow us closely, please bear with me as I go through these slides. Just a quick overview of our corporate structure. BRC is, of course, as mentioned by Renee already, it's a leading integrated resort developer and operator in the Philippines with our flagship property, Solaire Resort Entertainment City, located within the Entertainment City District in Parañaque. BRC is the listed entity in the Philippine Stock Exchange. It's essentially a holding company for various integrated resort holdings, and other interests. Solaire Resort Entertainment City is owned and operated by our wholly owned subsidiaries, Sureste Properties Inc., or SPI, and Bloomberry Resorts and Hotels Inc., or BRHI for short. So those are the two companies that you see directly under BRC in this structure. Now, the gaming license and all our gaming operations are held at the BRHI level, while all non-gaming, so our hotels, our restaurants, the retail area, that's associated with SPI. To the immediate left of SPI, we see Solaire Korea, which holds our interests in some 33 hectares of land in the Silmi and Mui Islands near Incheon in South Korea, and a hotel casino development on Jeju Island. To the immediate right of SPI is Bloomberry Resorts Japan Inc., which is a small office we have in Japan seeking out any opportunities within that area. To the far left is Bloom Capital BV, which we created years ago, no, when we were exploring raising capital offshore, but we never really used it. To the right of Bloom Capital is Bloomberry Cruise Terminals Inc., which previously held some tourism / luxury terminal assets, prior to the onset of the pandemic. And the last two on the right, those are the newest additions to our corporate structure: Solaire Properties Corporation, or SPC, and Solaire Resorts Corporation, or SRC. So these two new entities are created to hold assets for future development. And for now, that asset is the Paniman property in Cavite. Now, we'd like to highlight that Bloomberry and Solaire are multi-awarded entities within the corporate and integrated resort spaces. Recently, Solaire was awarded its 7th consecutive 5-star award by the Forbes Travel Guide. And the other awards here you've already seen. The newest addition really is from Finance Asia, where some of our key executives were recognized in the 2023 Asia's Best Managed Companies Guide. Specifically, Bloomberry was dubbed the Philippines' best mid-cap stock, while our chairman and CEO, Mr. Razon, was recognized as one of the best CEOs in the country, and our EVP, CFO, and treasurer, Mrs. Stella Tuason Oxenia, was accorded as one of the best CFOs in the Philippines. And moving on to our flagship property, we have Solaire Resort Entertainment City. It stands on about 9 hectares in Entertainment City, featuring world-class gaming, hotel, F&B, and retail amenities. At Solaire, we have about 270,000 square meters of floor area, total floor area, excluding parking. And then that 270,000 square meters, we have about 26,000 square meters of gaming space. We have about 800 luxury hotel rooms, suites, and villas. And all of them, now that all of them are open and operating. And yeah, we spent about $1.2 billion back in 2008, 2009, when we were building the property on land that we leased from PAGCOR. In 2018, we acquired that land, 16 hectares in total. So that gives us about another 7 hectares that we can develop for the future. And then currently we have about 330 active gaming tables on the floor, and close to 2,700 slot machines and ETGs, or electronic table games. And of course, we are very proud to say that Solaire continues to be the dominant market player in Entertainment City, with market share of about 37%. And that's actually about 100 basis points more than our share for the whole of 2022. Right. And we also continue to be the cleanest and safest place to play. Despite the threat of COVID-19 receding, we have maintained a large part of the initiatives we put in place during the pandemic. So you can see on the screen, we still have those automatic hand sanitizer dispensers, all the intensive cleaning protocols, regular testing of our team members and even guests who request. And of course, the UV light disinfection technology that we installed in our air ventilation system. So that's all still there. And now for a quick update on the Philippine gaming industry. Um, just so the our audience don't forget, no, we're only one of four operators within Entertainment City. So you have us, and you have City of Dreams Manila, who's operated by Melco Resorts Philippines. But the land and building are owned by another group, the Bell Corporation. And then we also have Okada Manila, who's operated by Tiger Resorts and associated with Universal Entertainment in Japan. And then we have over near Terminal 3, Newport World Resorts, which used to be Resorts World Manila, operated by Travelers International. Right, so you can see here the darker shade of green where Solaire is, that's the current Solaire. In the lighter shade, that's land that's not developed. Though we are planning to put a small permanent like a tent there, no, for what do you call this, banquet events. Because if you remember, we have closed down the ballroom in Solaire to make way for what we think is the best premium mass gaming area in the Philippines. All right. And so unfortunately, we don't have updated data on this. No, we're actually, I think we're the first to report results in the Philippines, at least within the gaming operation, within the group of gaming operators. PAGCOR still doesn't have updated numbers. But based on our performance, where we posted more on this later, no, but we posted growth of 80%, GGR growth, gross gaming revenue growth of 80% year over year. We should see around the same level of growth now for Entertainment City GGR. After all, we're all in the same market. So yes, it's very, very strong growth year over year. And as you can see in this slide, historically, Entertainment City has been build it and they will come type of market, in that as we opened as this industry opened more and more casinos, you only saw gaming revenues increase. As you can see, between 2012 and 2019, we have experienced CAGR of about 29%, no, and hopefully that continues moving forward. Now that we're more or less we put the pandemic more or less behind us. And of course, we know that the domestic economy is still growing. I think GDP was north of 6% in the first quarter of 2023. You know, Despite the relatively higher levels of inflation, and it's also good news that inflation has sort of tamed. We're starting to see the impacts of all the rate hikes over the last few quarters. So a strong economy and consumption continues to drive our mass gaming business, no, where our patrons are mostly domestic. So this includes domestic South Koreans and domestic Chinese. However, we also continue to keep an eye on international visitation, as the return of more international patrons may have a meaningful impact on our performance. No. In the first 4 months, we saw 1.9 million international visitors. That's an impressive 427% increase year over year, though we are coming from a very low base. So it's a very strong recovery, but still far off from where we ended up in 2019. The run rate is only about 70% of 2019. A more meaningful recovery in this space, could provide an upside surprise, no, for not just for our performance, but for everyone who's involved in tourism. Now, for a quick update on our first quarter numbers, we reported 16 billion pesos of GGR, up 80% year over year. And as I mentioned, this is fueled by domestic spending and an increasing participation of international fly-in business, but mostly coming from South Korea, some from ASEAN. No? A lot of the story that's going around in the market is the Chinese are coming back. Stocks or companies like Bloomberry stand to benefit, no, but I don't want to burst your bubble, but the reality is, while the borders are open, it's still we still haven't seen them come back. No, um, maybe a few reasons to that. One being, I believe it's still difficult to get visas for a lot of these for Chinese nationals. No, um, I understand we still don't have the visa on arrival back up and running, so that sort of dampens their return. But hopefully we see some of them come back later this year. But you can see our impressive performance. It's domestic driven. I can go ahead and say maybe we've actually returned to pre-pandemic levels, without that fly-in visitation. But of course, that is a welcome development down the line, and as I mentioned, could be an upside surprise if it does materialize. And now moving on, net revenues were 12.9 billion, up 79% year over year. EBITDA was 5.7 billion, up 100%. And net profit was 3 billion pesos, up 338% year over year. Now, focusing on GGR, we saw a significant growth in the first quarter, pushed by year over year volume growth in all segments. So specifically, rolling chip volumes up 103% year over year, mass table drop, that's 73% year over year, and slots coin in up 53% year over year. And then in VIP, we had some help from a very high hold rate of 3.8%. So in this industry, we have this thing called a hold. A theoretical hold rate, and that's an industry standard that over time, over a long period of time, and with large amounts of rolling chip volume, your hold rate should gravitate towards 2.85%. So we're way above that 2.85%, almost that's 95 basis points above 2.85%, and that helped lift our results. You know, uh, as to augment the strong growth that we already saw and continue to see in our domestic driven mass gaming business. And for purposes of this presentation, mass gaming is simply just our mass tables and slots performance. And this market is mostly domestic driven. And for mass tables, we're seeing some of that fly-in business help out, but it's at this point it's still mostly domestic in nature. So for VIP mass tables and slots GGR, we saw year over year growth of 142%, 27%, and 95%. Um, so yes, on the upper left corner, you would see the breakdown by segment. About 60% of our gaming revenues came from the wider margin and domestic-oriented mass segment. So that's the 30% plus the 30% of mass tables and slots. And this, yeah, as I mentioned, mass gaming, the margins are much wider because in this segment, we don't have the rebates that we pay out to VIPs and to junkets, no. So margins in mass departmental, and so that those margins in mass are about 40 to 45%. No, this is before any of the shared expenses, across VIP, mass, and slots. Whereas in VIP, on a normalized basis, meaning if hold rates were about 2.85%, the departmental margin would be anywhere between 10 and 15%. So you can see the difference. You can see the benefits of having a mix that is a GGR mix that is mostly mass oriented. But of course, this isn't to say that we don't want anything to do with VIP. VIP, because of the huge volumes that these patrons shell out, we'll welcome that business. And that they have a very significant impact on our profitability as well. So yeah, this is our net revenue slide, no? So growth in GGR was accompanied by growth also in our hotel, F&B, and retail businesses as well, resulting in consolidated net revenue growth of 79% year over year. And we've always been very proud of our first-class management team. If you could go to the next slide. They've been very effective at managing our profitability, in addition to maintaining top-line leadership among our competitors. As I mentioned, 37% market share based on GGR. In 1Q23, we've managed to hold cash operating expenses to 7.2 billion pesos, up only 67%. So, that compares to 80% growth in GGR, no? So this is significant since a large part of our cash operating expenses, over 60% of that number, is associated or is directly tied with GGR. No, 60% of our cash operating expenses are gaming taxes that we pay, and also cost of sales. So that means for the 40%, meaningful savings were realized. No, in that 40% would include spending on promotions and advertising, utilities, repairs and maintenance, no, among other things. So yeah, our management team, we've been in this business for a very long time, and they know what they're doing, and it shows in our numbers. Now, revenue growth and our excellent management of costs resulted in a year-over-year doubling of EBITDA to 5.7 billion and an expansion of EBITDA margin to 44% from 40% in the same quarter last year. Likewise, net profit quadrupled year over year, or almost quadrupled, on top of strong EBITDA growth. And to top off our very strong results, we're also very proud to say that we have exceeded 1Q 2019 pre-pandemic levels in revenue, EBITDA, and net income. So with the exception of VIP volumes, for obvious reasons, because China isn't back yet, but even without China, we can probably reach that number over time. But yeah, I mean, everything else looking very rosy, right? And of course, our balance sheet remains strong with over 38.8 billion pesos in cash and equity of almost 36 billion. We anticipate to add on some leverage in the coming quarters as we draw on the 40 billion debt facility for the completion of Solaire Resort North. But that can be managed as long as we continue to see net profit figures, in the black or in the green, however you want to say it. So yeah, probably we'll draw about 20 billion pesos from that 40 billion facility towards the completion of Solaire Resort North. And Solaire Resort North is actually our next topic. Work on the property continues. Recall that we've moved the opening to 1Q 2024, and so far we're still on track for that, but we're still seeing some of that supply chain constraints, due to the pandemic. So we're still working on that. We're currently finishing up on water tightening and have already started fit outs now in various parts of the property. So yeah, I mean, 1Q 2024 still achievable, but we'll guide the market moving forward if any further delays are warranted. But for now, we're sticking with 1Q 2024. And that 50 billion peso budget, despite these delays, is still intact. We have that 50 billion already has allocations for FX movements, inflation, and of course delays. So 50 billion still intact. And here's some latest progress photos as of end of March 2023. These are some of the fit outs that we're already doing in the gaming floors. Um, and yeah, some of the common areas. I think this is a dining area and an events area on the podium level above the ballroom. And last, I think this is my last slide. Any updates on our Cavite property? No update really. We're still completing we're still completing the acquisition of the land. No, so we've announced 280 hectares uh, as the amount of land we've acquired, but we've only actually paid about 4 billion of that because that is accounted for by land that we already have the titles to. So the other titles we're still waiting for, no, before we shell out any additional cash, no, to pay for that land. But of course, the master planning is being worked on, and it will be tweaked according to how we finalize this land acquisition. But for now, it's 280 hectares and just a waiting game. Hopefully, by this year, we complete that acquisition. But don't hold your breath. No, there's no definite timeline for when we will start construction and when we will open this property. As I've mentioned, this is a project for future development. We'll busy ourselves with Solaire Resort North, completing that project and open that project and ramp that project up over the coming years. And this becomes a project. This Cavite project, this Paniman project will keep us busy maybe for the next, you know, 10 to 15 years, after, or maybe 5 to 10 years after Solaire Resort North is up and running. And yes, I think that's it for my presentation. I'll throw it back to you, Renee, for Q&A.
All right. Thank you, Jonas, for that insightful presentations. But before, of course, we go to Q&A, I would like to personally congratulate you on the stellar earnings this first quarter 2023. And I believe that your earnings result was actually pretty well received by the market, given that the Bloom stock was up 6.38% yesterday and up another 3.27% today to close at 11.36 pesos per share, which is already above the closing price back in 2019. So with
Yes.
that, it's really good news for Bloom, and the market really was taken by surprise by your earnings.
Yeah.
Now, yeah,
Yeah. Go ahead. Go ahead.
go ahead.
Oh,
But yeah,
well, I was just gonna say, we can't really take all credit because it's really the really good management team that we have here at Solaire, at Bloomberry, that's responsible for those results. We're just here very happily sharing the good news with all our investors and prospective investors, no. I hope there are some in this call.
yes. And thank you, yeah, for your team over there, because you guys were able to post such wonderful results this first quarter 2023. So with that, let us now move on to our Q&A portion. To our viewers, if you have any questions regarding Bloom's performance, please feel free to type it down in the chat box below. But before we actually move to our viewers' questions, I have a personal question on my own, which I hope, Jonas, you can help me answer. So I recall that you actually mentioned during our full year 2022 earnings call that the Chinese as a group contributed about 44% of total gaming revenues. So while I know that international market hasn't really returned fully, did you at least see any improvement in contributions from Chinese patrons as of the first quarter?
Well, so last year, um, Greater China as a percentage of our total gaming revenues ended up under 20%. And yeah, that's much lower compared to what it was pre-pandemic.
Mhm.
In the first quarter, that number has improved, no, to about 25%. But as I understand it, these Chinese patrons that have started playing are domestic in nature, no? Some of our junkets have been very successful in bringing online or bringing in or farming, the local Chinese community, and they've been able to bring in more players, more volumes. Uh, Despite the fact that it's very difficult to fly in, um, Chinese nationals from mainland China as of the moment. No, so this improvement in Greater China contribution is still domestic driven. We have seen a bit more improvement coming from uh, South Korean fly-in visitation, and South Korea, Taiwan, and ASEAN as a group continue to be 35 to 40% of our total gaming revenues, and then the rest of it will be Filipinos.
All right, I understand. Thank you for that answer, Jonas. Okay, so now it's time to actually entertain our viewers' questions. So first we have is from Irving Chen. With the rise in COVID positivity rate, did you see it impact your foot traffic recently?
Short answer is no. Um, Foot traffic, we're at 13 and a half to 14,000 people on average, at least for the first quarter. I understand that in April and May, it was a similar statistic. Uh, it hasn't really impacted. And it actually improved from the fourth quarter. In the fourth quarter, we were at 13 to 13 and a half thousand. And actually in the in yeah, for a few days over the last 3 months, no, we've seen days where we were seeing uh 15 to 16,000 people a day, because we had shows like Sting, David Foster. So that brings in tends to bring in more foot traffic. I mean, not all of that incremental foot traffic goes to the casino, but still, it's a good statistic. It helps our theater business and the retail and the F&B businesses. So yeah, just quick answer: the rising positivity rate hasn't really impacted visitation to Solaire. And yeah, I mean, as I mentioned, no, we're the cleanest and safest place to be. No, the air that circulates around Solaire um, is, it's hospital grade air because of that UV disinfection technology that we installed at the height of the pandemic.
Yes, all right. I hope that answers your question, Irving Chen. And Irving also says, congrats to the investors for your results. Moving
Thank
on to
you.
the next question, we have from Jaime Zalamea. Should we expect the VIP section to make up the majority of gross gaming revenues for the year?
Well, Jaime, the way we see it, no, that will really depend on how the international visitation, um, you know, picks up. I mean, we have a very robust domestic market that is made up of Filipinos, Chinese, and South Koreans. We can continue to expect growth there, no? Um, but whether or not we will see VIP revenue go back to 45-50% of our revenue, as it was back in 2018, 2019, that would probably take a more meaningful or require a more meaningful recovery from international visitation, because typically an increase in international visitation means you've got more South Koreans and Chinese flying in. I mean, those are the two largest contributors in terms of inbound visitation. Um, they're typically brought in by junkets, for those at least who are coming to our property, and that's automatically VIP. Now, in terms of, you know, we're seeing very good growth in GGR this year, but truth be told, 1Q 2022 was only, when we started recovering, no. I would still classify 1Q 2022 as a pretty low base. Because 1Q 22 we still had Omicron. I think that was when Omicron came out.
Mhm.
We didn't close the casino, but we still posted pretty good numbers. So I think this year the 1Q, the 80% year over year is a great number. 80% growth year over year. That's a fantastic number. But then as we progress, 2Q 2022, 3Q 2022, and 4Q 2022, the comparison becomes tougher because those are higher bases. No, so I would tend to think that our growth would, there's still growth. It would trend downwards to to more reasonable figures down the line, and then next year, when Solaire Resort North starts to contribute, you'll see, strong growth again, maybe, going north of 30, 40, 50% year over year, no? Depending on how well Solaire Resort North is, ramps up. So just to manage your expectations.
Thank you for that, Jonas. I hope that answers your question, Jaime. Now, moving on to the next question, we have from Frank Gan. Can you enlighten us why Bloom decided to terminate its interest in PH Resorts Group?
Well, there's only so much we can say about that, no. But it really is because we did our due diligence and we made a final decision not to pursue that. One of the reasons you could say that we decided not to is because we have our hands full with Solaire Resort North. We're gonna After Solaire Resort North, we have what do you call this? We have our Paniman. So I think we deliberated and thought that maybe we can just focus on what we have on our plates and not add on to that. Um, and yeah, there's so much I can say, and I'll leave it at that.
Yeah, I think you said enough for the viewers.
Yeah.
All right. Now, for Nikki Garcia, she asked, is there a particular reason why non-gaming revenues declined 4% sequentially?
Oh, well, I would attribute that to seasonality. Fourth quarter is typically where you see revenue strongest because it's it's the holidays. We're Filipinos. Christmas is what, a 4-month holiday. So fourth quarter is normally where we ramp up, or when we ramp up, promotional activities. People tend to go out more, not necessarily go to the casino, but they want to eat out, they want to shop. So normally 4Q is strong, and then when we move to 1Q, it sort of levels off. Uh, so there's not much, there's no really reason to worry for a 4% decline quarter on quarter.
All right. In line with that, Jonas, you also mentioned in your disclosure that slots GGR actually declined by 15% quarter on quarter and now
Mm-hmm.
only accounted for 30% of GGR as compared to 38% in the fourth quarter. Is this also due to seasonality reasons, or is it because your customers have been switching from slots gaming to VIP gaming?
I there are a few reasons for that. One is the hold rate. If you notice, the hold rate also declined. Um, and that's probably because we paid out a lot of jackpots in the first quarter. The other reason, yes, there's also seasonality involved. As I mentioned, promotion. 4Q is very promotional, and then you're moving to the first quarter where you don't really need to promote that much.
Mhm.
Um, So a lot of that promotional expense is tied to gaming volumes in slots. Eh. So again, yeah, that seasonality also involved in that quarter on quarter decline. But that being said, 1Q GGR is still very strong, and it's all still above pre-pandemic levels of revenue, and even the volumes are also above. And we hope to continue that trend for the rest of the year. I mean, again, seasonality, you shouldn't be worried about these quarter on quarter declines. It's best to look at our business on an annual basis. No, at least the trend for towards the rest of the year. Look at that. I mean, don't be so worried about what happened during this quarter. I mean, it's clearly explainable. Why there was a dip. But I think year over year we can still post growth in this segment.
Yes, all right. Thank you for clarifying, Jonas. Okay, for the next question, we have from Rose Tiang. Have you implemented any cost management measures that help keep operating expenses down?
You know what? There's always some of that going on. No, we continue to find ways to try and save electricity, expenditures on gas or gasoline, uh, find ways to be more efficient with our advertising expenses. So it's really hard to pin down specific things because we're doing it all over the place. Um, where it makes sense to try to make money or generate savings, we'll do it. No, so it's an ongoing iterative process. But yes, again, some of the cost improvements uh, came from lower utilities expenses, probably as a combination of some initiatives of our on the ground team members, and some of it is also because again, you're coming from the fourth quarter where there are more people in the property, so you need the air conditioning to be at max um, cooling capacity, whereas in the first quarter you don't see as many people, so you don't need to go all the way to making the property cool. So there's some cost savings there as well. um, so yeah, I mean, that being said, it's really our management team who has it, our various unit leaders that are have their hands full trying to find area where we can generate savings.
All right, thank you for that. Hope that answers your question, Rose. Moving forward, we have a question from Luis Francisco. Hold rates for mass tables have been quite steady at 40% the past few quarters versus your pre pandemic hold rates of around 30%. Could you explain the superior hold rate? Competitors are at 30% and below.
Okay, I'm not very familiar with our competitors' numbers, no. But what I can tell you is we probably have a very good player database, no, a very high quality database, and high quality means these are players who have very good spending behaviors, no, at least for our purposes, no. They have very deep pockets. They like playing. They like our property. They stay with us. Even with these other properties offering a lot of other promotions to try to take them away. Um, the I can say what has changed between today and before the pandemic is now we have a larger portion of our mass tables business coming from the premium mass segment, right? Before, in 2019, premium mass made up only about 36% of our mass tables gaming revenue. So meaning the rest of it was the general mass floor. Now the pandemic happened. For most of the pandemic, 2020, 2021, we only had open the premium mass gaming floor and some parts of VIP. So that probably gave us, the chance to focus on this VIP, on this premium mass market, generate a very good base coming out of the pandemic. And now the number is about 50% of our mass gaming business is coming from premium mass. Now, premium mass players, these are the guys that you want in your casino because they're the ones with the very deep pockets. They stay long hours and they are very loyal. No, they're premium mass for a reason. That means they've been playing with us for a long time. They have a lot of points that they've accumulated with us over the years, and those points expire. No, if you don't play with us, if you don't use them, they expire. So if they don't want those points to expire, they will stay with us, which makes it very expensive for competitors to try and poach them from us. No, so that's why we love that premium mass market. And these players, because they play in large amounts, that has an impact on the hold rate, and that's probably why we've seen the hold rate inch towards the 40% range. And if we don't see a meaningful change in the mix of players, then 40% is sustainable. Um, yeah. Yeah, I'll end it at that. It's probably a follow-up question to that.
All right, thank you for that. And I hope that answers your question, Louise and Alfred Benjamin Garcia, who asked the same question. All right,
Okay.
now let's move on to Marga Villarc. Congrats on the first quarter results. So far, the hotel occupancy rate for first quarter 2023 is 76.9%. What do you project your hotel occupancy rate will be towards the end of the year?
It's hard to say, but of course we're working towards, the property being fully occupied, no? Anything north of 90% is already a very good number because that's where we were pre-pandemic. Um, but we're posting modest gains every quarter. I mean, you've seen it in our numbers. It's probably just a matter of time before we reach, 90% or north of that. But it's really just difficult to give a projection by the end of this year. But hopefully, we reach 90 plus percent. I mean, one of the reasons why we were at 90% before the pandemic was because we had a lot of fly-in business. Now we're only seeing that business start to come back, no, starting with South Koreans and ASEAN players. Because of course, domestic players, they don't really need hotel rooms.
Mhm.
So if we see more fly-in visitation throughout the rest of the year, then yeah, we can continue to see hotel occupancy improve towards pre-pandemic levels.
So I hope that answers your question, Morga. It is north of 90%. All right, now let's move on to the next question. This one is an interesting one. From Charles Lannon, what are your takes for those who want to purchase your company's stocks in PSE?
Sorry, what are the
Your
what's
take,
the my
your
take?
takes for those. Yes, I think maybe Charles is pertaining
It is
to.
probably better answered by AB Capital. uh,
Yes,
Medyo
for
sales na
us,
to eh. So I
yeah.
don't want to comment on that. But of course, you've seen the performance of the share price. Um, and I'm sure everyone who spoke to us during the pandemic when our share price was at 6, 7 pesos are very happy now. But we're biased. there will always be areas where we can squeeze out some growth. So hopefully that translates into an even stronger share price. But I don't want to sound um, so sure of myself. No, it's very subjective. So I'll leave it to AB Capital to make the recommendations.
Yes, for us, Charles Lannon, we actually see Bloom as one of our stock picks for the gaming sector. As we see that the improvement in tourism will actually help benefit um, Bloom's earnings moving forward, especially as international travel recovers. And aside from this, of course, we expect additional contributions when Solaire North comes into the market in the first quarter of 2024. All right, moving on to the next question. We have from Vicente Jr. Dizon. So, what is the status of the 1 billion that Bloom paid to PHR?
Um, that's still something that we're waiting for them to return. No, they'll return it down the line. No, we'll make appropriate disclosures. Once there is something to say about it. But for now, it's outstanding. But we're hopeful that we can get it back.
All right. Hope that answers your question, Vicente. Moving forward, our next question is from Your Majesty, one of our local viewers here in AV Capital Securities. So, Your Majesty asked, can you add color on Forex related gains or losses of Bloom? How was it in first quarter?
Oh, I think we had about 200 million of FX loss in the quarter, and that's because the peso strengthened. Is that right? Yeah, the peso strengthened. So we're long dollar because we have some dollars and Hong Kong dollars as part of our operating what do you call this? Our cash. What do you call this? Our working capital. No, we have some dollars. We have some Hong Kong dollars because you can play Hong Kong dollars in our VIP tables. No, so our cage has those foreign FX. So whenever the peso weakens, it's reasonable to the peso strengthens. It's reasonable to expect some level of FX loss in our financials, in our PNL. And I think that's been the case ever since. And we're not really in the business of hedging against that because this money is in our cage. We want to be able to pay out or be liquid whenever the because these are directly related to our operations. So imagine a Hong Kong dollar player uh, paying or winning and we can't pay out because the money is hold up in some kind of hedge instrument, no. So we want to be able to keep that flexibility. So I don't think we have any sort of FX hedges active.
I hope that answers the question, Your Majesty. Okay, moving forward, we have again from Charles Lannon. Yeah, I'm watching the end per share today. It's really good. Plus, your long term plans sound fantastic. Looks like you recruited another investor, Bloomberry. All right,
Very
moving
good.
on.
All right.
Yeah, very good. Okay, next we have from Grosby Tan. After Sting and David Foster, do you have any more big name international artists coming this year?
Hamilton is coming in September. That will be their Asian debut. Those there are shows running from September to November of this year. As for the other names, just stand by. Our guys are probably working on big things. I mean, after all, now's the time to be aggressive. Trying to get all these acts to the Philippines because things are more or less getting back to normal. But for now, to answer your question, it's Hamilton coming in September.
All right, thank you for that question. Now for the final question to close our Q&A. It will be coming from me, and given that Bloom's first quarter 23 net income already accounted for around 47% of full year estimates, do you perhaps have any earnings guidance for full year 2023?
So unfortunately, we don't give guidance no, on those things. Because remember, the nature of our business is it's tied. A lot of it is tied to luck. I mean, the 3 billion is 3 billion because we had very good VIP luck. So we don't want to tie ourselves down by giving an exact number because that luck can easily turn around on us. Um, but I can tell you that this year is looking very good. Even without the Chinese coming back, We're already on track to have a very good year. Though well, I don't want to be quoted in just giving you an exact number. But yeah, I mean, for investors, prospective investors, just stay tuned. No, we'll be speaking with AB Capital and you guys every quarter and give you updates.
All right, thank you for that. We are very optimistic about your growth prospects as well at Bloomberry. All right, it looks like we have heard everything that we need regarding Bloomberry's performance. Once again, I would like to thank Jonas and Robin for taking the time to discuss with us Bloom's first quarter 2023 results. We're looking forward to hearing more from you in our next earnings call.
All right, thank you.
Thank you, guys. Thank you. Now, before I let everyone go, let me recap what we discussed this afternoon. Bloomberry exceeded its pre pandemic performance during the first quarter 2023 as its consolidated net gaming revenues grew 79% year on year and its net income surged 338% year on year. Bloom has risen 48.5% year to date in a flat market, and there could be more to go as the stock is arguably more valuable today than it was back then. Revenues and demand from its domestic market continued to be strong in the first quarter, and it is now only a matter of time before its international component fully recovers. And that officially ends today's earnings call. Thank you so much to everyone for taking the time to join us this Thursday in getting informed on Bloom's first quarter performance. Once again, I am Renee Allison Estamata of AB Capital Securities, your host, and see you next on our next earnings call. Bye.